Aloha from Maui, everyone. The market in New York City is not looking that good, but I got to be honest. I left in the final hour to go to CrossFit, and I believed whenever I came back, there really wasn't anything in play, nothing holding up. I noticed that Ford did do a little bit better into the close. Maybe I should have been around, but overall, this was like really the only stock I was watching today. But the overall market, I really did expect to close near its lows. So the fact that we didn't close near the lows and that we held the 8-7 low a day on the NASDAQ is a short-term, decent positive, but overall, it's a technical distribution day. It's another close below the 50-day moving average. It's very hard for me to be bullish here at all, even though I do have still some chart patterns that are moving higher. Like look at DXCM, ABMD. Doesn't look like there's really anything wrong there. If you notice one thing, they're health services stock, not biotech stocks. Biotech stocks continue to get crushed, and that's why we have an ad signal in our hedge. But first, let's get back to the market. The NASDAQ, you can see with my oscillators on the screen, they are nowhere near oversold near the bottom of these pane windows, and they're not even rounding up. So we really don't have any indication that we've seen the lows. Stochastics is still racing, hasn't even hit oversold yet. RSI is barely oversold at levels like it's got to get to 24% before I can start even entertaining a bounce, and it's got to get down to these levels before I can even start to entertain a bounce on stochastics. So we're nowhere near where we need to be. In the Russell 2000, we're getting there here on this index, but this has the look with this deep of a last previous peak of something that's going to get oversold and stay oversold. So it doesn't look good either. MACD, you can see it's in a slow grind down, no big positive divergences. So once again, why should we expect the Russell 2000 to bounce? Volume was heavier there too. Another distribution day. S&P 500 also down 0.96. Volume's about even with the day before. It's splitting hairs. I'm not sure what IBD has or MarketSmith or whatever, but the bottom line is it's just not good. We weren't able to immediately follow through with the retake of the 50-day moving average, and that's never going to be good. You can see TSV and MACD nowhere near oversold. RSI, stochastics nowhere near oversold, and that also goes with the Dow Jones Industrial Average. Oversold on the stochastics, nowhere near oversold on the RSI. Starting to get there on TSV and MACD, but still not quite there yet. And while stochastics is there, there's still no hookup. So overall, the Dow Jones Industrial Average still looks weak. And once again, with the long-term lower lows in place, it's going to take a series of higher highs and positive divergences before I even think this is good. And volume heavier today indicates another sell-off on the Dow Jones Industrial Average. And if you'll notice, volume has been consistently above average on the sell-offs with no reprieve. The bounces have been below average besides this one day. So they're slowly distributing into the market, and this kind of slow distribution can culminate into a big, gnarly, one day, 1 week. It's a swoon fest. Look back here in October and just look back here in December, for instance, of what can happen in a short amount of time, especially now. I mean, we got a death cross in the Dow Jones Industrial Average. Did that just happen today? Did I just now notice that? Wow. So now we got a death cross in the Dow Jones Industrial Average. The Dow Jones Transportation Average, some of the transportation stocks, like some of my personal favorite one, SkyWest, looks good, breaking out new highs. It was an earnings winner. I was kind of hoping it would move sideways. It didn't before breaking out. But the bottom line is overall, transportation stocks don't look like they found a bottom either. And while MACD and TSV has been trending higher, price isn't really going anywhere, and I don't think that's a good sign whenever you see stochastics getting back up here to overbought territory. So overall, there's no reason to be bullish. And then look at this. Look at what happened today. Brand new long position, only 1%. Told you it was an improper cup with handle. Didn't expect the breakout to hold, as I said in my video session, but I got to take the signal. I'd feel a fool if it did work without me, just because this is a pretty good base in a good market. This is a great signal, even though volume's a little lax. It's still a strong signal that would produce gains, but we are in a different market. Fake outs or breakouts, and GoPro failed miserably. Half my sell stop was below 60.51, and I guess I should have put it all there in hindsight, but whatever. I'm okay with what I did. The other half was 59.38. I don't regret anything. GoPro, heavier volume sell-off. If you're not out after this new long position, you got to be completely out. But look at some of this stuff. Red Robin Gourmet Burger. Closing lower than where it opened following a big move down. XON closing lower than where it opened following a big move down. BSTC just complete carnage. Ugly, ugly, ugly. LJPC confirmed its 50-day moving average break on heavier volume by confirming it with red bop. Ugly, ugly, ugly. Ever since our CYNI has turned into Sienna, it has been terrible. So as soon as CYNI became Sienna, it's done nothing but sell off. And today it's closing below this support level right here, giving me a full sell signal with the heavier volume. No way I would wait for it to even enter back to where we were long, which I can't remember anymore. CYNI will tell me. Okay, so we were long back here. So if you're still long, I believe we're probably flat. Nope, small gain still, so that's good. And most of these we're leaving with small gains. CAC is finally giving a full sell signal. If you don't remember, because I barely do, I believe I was knocked out of all of it all the way back here. So I've been waiting for a month to give it on an end-of-day basis. But CAC is finally re-rolling over. This now looks like it's rolling over. Lower highs, lower lows on heavier volume. CAC is a full sell. And then NGHC, going back to BSTC, XON, and RRGB, another stock that gapped down and closed lower. The exact opposite of what we saw completely going into this most recent pullback in the market that started really on July, because I got to use the NASDAQ as like my topping reference, July 21st. So ever since July 21st, this has been the prevalent action in RRGB, in GHC, and XON. And if that doesn't tell you to be careful, I don't know what else is. Potential buy stop a little later on is GIII, still a perfect speculator scan quality stock, but still nothing great there. But outside of that, there really isn't anything that good. I got an ad signal today, my hedge, BIS. I know it's closing 1 penny lower than where it opened. I don't care. I saw it earlier intraday with a big intraday reversal, and then it was near its, upper portion of its intraday range. And I knew that if it closed up there, I wanted to add to it with that volume surge, and with BOP slightly higher than the day before and still holding on to strong near max green levels. So BIS, 2.5% hedge, 50% of that sell stop of this new long position, which my limit is going to be 28.87, is going to be 27.60. So if it hits 27.59, I'll be taking out a half of the ad. And then if it hits 26.92, I'll be taking out of the remainder of the ad signal. But BIS, 2.5% of my account capital. Can't go bigger because I already took a big 5% position, which is very risky because I got to lose about 9% before I know I'm wrong on that, trade. So 2.5%. So I'll be 7.5% invested in BIS, which is a 3 times leveraged instrument. And the way that, I got other partials. So look at EGRX, look at INSY. Okay, that's it for those medical related stocks. But, there's still some big, big, ugly sell-offs. Blue trying to completely roll over. It's just not looking good. INCY, barely holding up. That was a previous long. How are the big boys looking, though? I haven't even looked at that Celgene. I bet you that's a top form in there. BIIB. Oh, yeah, not good. So, yeah, not looking good overall. Now, despite all of this, I actually do have one new long position. Quite shocking, I know. It was found in my IPO scan, and it was confirmed in my price volume BOP scan. Huge sales growth, very large mutual fund ownership growth since it's gone public with some insider buying 3 different separate times, which has now been followed by some insider selling. But HDP is trying to break out post earnings. It caught my attention, obviously, after earnings here. This was a nice move here, and I was interested in going long. But, on that chart, that's just too wide of a move intraday. And then you got a little reversal near the highs. But today, another intraday reversal off the lows on very large volume with it closing higher and actually near the high of the day. Almost above where it opened at 27.96. Actually, it did. Oh, shit. I didn't even notice that. Sorry, everybody. It actually closed. That's even a double positive for me. So I thought it closed at it. So 27.96 was the high of day on the 10th. It actually closed at 27.97, taking out the opening price level of HDP. So it's good for me, even if it was, I thought it was just at it. So I was wrong. I thought that said 27.97 when I looked at it earlier, or 27.96 on both of these. But maybe it did whenever I looked at it. But either way, it's closing above it. Heavier volume, still has max green BOP. The internal indicators, they're good. they're in an uptrend, higher highs. So everything looks good for me to go ahead and take a small position. If this stock would have lost its max green bop, I would not be taking this long signal. But also, we don't risk much if we know that we're wrong. My first cut loss is going to be below today's low a day. 20 hits 26.75, I'll be out of half of it. And if it hits 25.48, I'll be out of all of it. I'm not sure exactly what that is, but let's say that we get a terrible fill and it doesn't, go out to, like, let's say like this level. We risk just slightly over 10% on the entire position, with it only being 1% of the account capital. It isn't going to hurt that much. So that's it. 1% HDP, 2.5% BIS, and a ton of sells.